going along with my market outlook that we are in a late bull market, so a mature bull market, I want to really, this isn't really a market where you can just pick any sector and pick a stock that's having a bullish breakout and then go buy it, because you're going to have the sector weighing on the stock. So for instance, like XLK right now, yeah, it's been doing great, but recently it's starting to underperform the rest of the market. So like XLK has been underperforming, like the Russell 2000 has been underperforming, and that's just been pretty much how it is. So I wanted to look at Transocean today, which the symbol is RIG. Now, probably anyone that knows about this or has heard of it probably heard of it back during the BP oil crisis or oil spill, which was also during an oil crisis. But anyway, so we see pretty much that it has been doing this really boring consolidation, and for a while it didn't even pay dividends. So anyone that was holding this stock was essentially a Google, where there was a lot of hype and you didn't make anything. Now at least you get some sort of dividend. Let's see, 79 cents. So it's a pretty good dividend. But anyway, what I really am looking at right now is we have this really strong support level right here at about $40. And then since about 2011, we've had this downward sloping trend line, which, let's see if I can extend this back at all. Nothing significant, but we've had this downward sloping trend line that has been giving us a couple touches. So we see 1, 2, 3, 4, 5, and then this stuff right here. So what does this look like to me? It looks like a very large descending triangle. Now the thing is, if we actually take this pattern and we say, okay, we think that oil is going to break upward, we would say, actually, don't forget I said that last thing. We have two targets from this. We have 105 to the upside, and then to the downside, and this is funny, tell me you actually believe this, to the downside we have -20. Okay, so one of these is going to be right. It's either going to be -20 or it's going to be 105. Probably 105 is more likely, but what I want you to see is how this reacted back during the oil panic in 2008. So if I go here and I zoom into, let's start with 2007, when oil started going up. Take a look at this. Ocean went from 70 bucks to 150, nearly 155. So it's obviously very correlated with the price of oil, because, well, Transocean, they do oil. So if we would actually trade this, we would wait for a breakout. So I would say wait for a breakout above, if we're looking at this right now in the shorter term time frame, I would say wait for 50. So buy stop at 50, and we will keep our stop level, we'll say around 44.50. So stop at 44.50. And our target, yes, 105. So target 105. Remember, you can watch this in full screen in HD. I make sure to make it HD just for you. So target's 105. So what we have a $55 reward. We have a $45 potential risk. I mean, we have about $5.50 potential risk. That's about a 10 risk reward ratio. That's fantastic. So that's how we would do the trade. And let's just take a look at a couple momentum indicators just to see if anything here is pointing to a short-term breakout. So if I go into this 5-year chart and I take a look at, let's take a look at just the RSI, so don't out my screen too much. If we take a look at this, you notice that each time we're hitting this support level, so 40 is the level of support. Each time we hit that, notice we're at about 20 in the RSI. The next time it hits that level, it's about 15 in the RSI. Next time it hits that, it's about 30 in the RSI. And then this time, it is 40 in the RSI. And the time before that, oh wait, that wasn't a hit. There's the hit right there. So that time about 32, and this time is 40. It keeps going up, and 40 is the RSI level for a bull market. So this one, it looks like, at least on the long-term time frame, that it really wants to break out. So What do you want to do? Do you want to hope that something goes wrong in Iran and suddenly we have the Strait of Hormuz closed, so they're drilling in the Gulf and everything? I don't know. So they're correlated to oil, so we want to see oil break out as well as Transocean breakout. So there's your strategy. You buy stop at anywhere above $50. Not yet. And your stop loss is at 45.50. I know, really close to where it is right now, but it's a long-term trade. And then your target is 105. Alright, so there's your trade, and go make some money.